projects, was kidnapped at 14, ended up launching my first fund at 27. Me and my co-founder are two of the youngest Hispanic GPs in the country. And most people passed on us. Most people said, you're not in Stanford, you're not in SF, you're not in New York, you never came from a fund, right? And now those same people are like, hey, can I invest in fund too? So we try and take that same approach to founders. I think that the people who are going to succeed are the people with a chip on their shoulder. And back to kind of what you guys were talking about, I'm originally born and raised in Cleveland. And Philly has that same type of grit. And I think that within the ecosystem of people who want to play to win, but also want to play not to lose, is extremely important. And when we look at founders, I'm not like, oh wow, you went to UPenn and that's just like a box that I want to check. I want to ask you about you. What's the hardest loss you've ever had? I know that you're a winner because you're at UPenn, right? You're doing a bunch of great things. But what have you lost at? And I want to weigh it against what your pain tolerance is. Because they always say, like, starting a company is like chewing glass and staring into a dark abyss, right? Like, you never know what's going to happen. You have to be a complete psychopath to actually launch it, You're probably a masochist and hate yourself. But, you have to get out there and really go for things. So I put no weight on where you went to school. I really don't give a fuck if you went to school at all. Building product, use AI. I was just having this conversation a little bit ago. I think if you're trying to build a customer base, things are going to revert back to analog. I promise you. So one of my mentors, he's trying to get in front of a bunch of customers. There's all these bots sending emails. There's all these things scraping LinkedIn, and you're overwhelmed with all this noise. How can you cut through that noise? So my mentor used to literally get a rubber foot, send it to a potential customer, and write a handwritten note and say, I'm just trying to get my foot in the door. Right? Like, that's something clever and scrappy that you could do. One thing that we did, I was just having a conversation with an amazing UPenn founder here about, like, why don't you start hosting events, right? Get your potential customers, advisors, things like this that you want to get in front of. Be like, hey, I want to put you on a panel. That's a really good way to get in front of somebody because, let's be honest, if I'm trying to sell you something, you're probably not going to answer the phone. If I'm trying to put you on a platform so you can talk about yourself, you're never going to stop talking about yourself. Right? Like, everybody wants to talk about themselves. So I think like things are going to continue to go back to analog on the customer like B side. And I think for every founder here, if you could start to build a community around your product and start to get in front of people, like that's the happiest, scrappiest way that you could start to build and close deals. I think that founders also have this same problem in their deck that they have in their pitch meeting. Your deck is not to close. Your first meeting is not to close. Obviously that happens. There's been like one meeting where we're like, okay, we're fucking in. That happens, but it's not all the time. What you want to do is have them wanting to learn more information and having the next meeting. I just met a founder about 2 months ago. We had a 30-minute time slot. By the time that they were done pitching and walking through the deck and going through everything, it was 28 minutes. And I was like, hey, I have a hard stop in 2 minutes. They're like, oh, you have 2 more minutes? Perfect. Let me tell you 3 more things about what we're doing. And I'm like, holy shit, you didn't ask me one question. You want this to be a conversation. Hey, high level, this is what I'm building. This is my plans to go to market, blah, blah. Let's make it a conversation. And then boom, have them wanting more. You always want to leave people wanting more. And have them follow up meeting, have them follow up meeting. And then closing the capital, obviously, is the ideal outcome. But I think a really big red flag is just like, I don't trust you. We actually had a founder, and we had all these great numbers, and his previous company got acquired by somebody in the space. So we just so happened to be invested into a company that was co-founded by that guy. So then we reached out and we found out that the previous company that he sold the guy was a bunch of fake users and it was a bunch of bots. So I back channeled and he was like, oh, well, this happened and that happened. Look, I don't need to know the details. It could have been real, could have not been real, but the fact that we're having this conversation, I'm out. That you sold like a illegitimate company with fake users. If that's even a conversation, I'm out. But I really like it. So I think a green flag is that you're curious, you're willing to take feedback. I think sometimes founders also hear a no and they get really offended. I know another founder who literally posted on LinkedIn screenshots of emails. It was like, this guy talked to me for 10 times and didn't, write the check, like F this guy, everything else like that. And I was like, I could never touch that founder, ever, right? And then I have a story for us. One of our first pitches, it was a really big LP, and he was just like, hey, look, you guys are crazy. You're 27, you're trying to launch a fund, you never read a fund. He was just like, you're never gonna launch this. I took the note with grace. I kept him in touch. I built in public. Everything that we do after this event, I'm gonna post a picture of the room, tag a bunch of people, like everybody should be building in public. And 6 months down the road, he gives me a call and he was just like, where do I write the check to? because I just kept building in public, kept doing what I need to do, running my business, and eventually the investors will come. And there's 3 kids up there that are absolute rock stars. 2 of them are in high school, 1 of them is a freshman. And if I was you guys, give them a round of applause. For example, if I'm them and I'm expoing right here, I would have somebody go out there while you're doing the demo, take a picture of you guys doing it, say, hey, you know, I was at the Philly Expo, we were talking with a bunch of founders and investors, this is what we're building, hit me up if you want to learn more. Boom, little stuff like that. Just keep it top of mind all the time. I'm moving this train regardless, I have momentum, I don't need you. And then people are just like, oh my God, I want to be in. But it's the desperate founders who are just like, please, can you give me some cash? Everybody, it's just something psychological where it's just like, you know. So I'm going to teach you how to do diligence on an investor and get an introduction. You look at a fund that you want to pitch, you look at their portfolio, you find 2 or 3 founders, you reach out to them. You say, hey, I'm thinking of potentially pitching this VC. I would like some feedback on your relationship and experience with this investor. You hop on the call, you start to get to know them, you tell them about your business, you become likable, they like you, they make the warm introduction to their investor. Smooth moving. Because I'm always going to listen to one of my portfolio founders, especially if I really like them. And they're like, hey, this guy's a rock star, this girl's a rock star, you got to take a look at them. I'm going to take the call immediately. So that's how you do diligence on the investor and get a warm introduction from one of the portfolio companies all at the same time. That's a great effort.
A lot of public scrutiny and also mistrust in AI systems. If anybody can speak to that and what you would recommend for startup leaders to address these controversial issues.
I think the conferences are great. I mean, in person, I'm like really big on analog and getting together with people. Something that you could start doing that's immediate is post your own thoughts, everything else like that, but you could also create a series of people who are in this space who are already insane thought leaders and being like, hey, once a month, I have you publish what you think about the space. And then you're basically attaching your brand to these really big names, like Alex Cart, for example. Maybe you're not going to get Alex Cart, but maybe somebody from the Palantir team. Hey, what do you think about spatial intelligence? What are your thoughts, blah, blah, blah. And then you're interviewing them and you're attaching your brand to what they think in their brand.
My question for the panelists, specifically the investors, is what does investor ready mean to you for pre-revenue startups?
I think most investors want to put fuel on the fire and not invest in like sticks and trees. So you have to be at this inflection point where it's like, this is the milestone that I got to, this next tranche of money is going to get me to the next milestone. And now I'm going to turn on this, or now I'm going to be able to spend money for this exact thing. And I think that that's like when you're ready to do investments. But great pitch as well.
Talking about ARR with regards to AI companies right now and sequencing, staging of rounds for those folks that are going through seed, pre-seed, and then obviously Series A. How are you guys thinking about advising either portfolio companies or folks that you're just talking to and are asking these questions about at what ARR levels should we start thinking about valuations of X and what are the multiples and so on and so forth? When can I raise a Series A? What's the right revenue traction at that point?
That's a good question. I think it's still changing day to day. I don't have a solid answer like, hey, go out for your Series A at this exact inflection point. I look at these funding rounds more just as numbers, right? Like you raise some money, you got to a milestone, now you're going to raise the next tranche of money, and we need to expand it. When you're talking about ARR, I think that there's different qualities of revenue for sure. So like, is this a really long contract, 10-year contract with a really big prime, for example, somebody who's like really deep entrenched in the space? Is it just like a one-off with somebody? And I think that's like kind of a mixed bag that I see with founders when we're talking about ARR. But I mean, it's pretty much up to you. I've seen some monster rounds at seed. I've seen some really small rounds at Series A. I just saw Series A that was a $25 million valuation, which you can see in a pre-seed round. I think it's a mixed bag. It's all just, ecosystem. What are you going to pitch? I think we got to figure it out.